It is Friday, the last trading day of the week, and it is our show here on our YouTube channel. We are live now. It's our halftime report where we go through the markets one step at a time to help you guys understand what's going on out there, give you some insight on the analysis in terms of chart analysis, price action, news, whatever's happened economically. We had a PPI report today. I'm going to get Coach Matt's take on pretty much anything we think is important, relevant, interesting, break it all down and bring it to you guys in our show. And welcome back to our community. Hashtag Team Tackle right in the chat. Always getting the conversation started the right way. And I love seeing those thumbs up, guys. Make sure let's get the analytics up, help us get the word out here on Tackle Trading, get some more traders out there to come and join our community here on YouTube. And let's bring the coaches in without further ado, get right down to business. Got Coach Matt and Coach Frank, as we always do here on a Friday. Matt, you first. How you doing today, sir?
Doing fantastic. Excited to be here with Frankie and yourself and hanging out with the crew to break down the market activity here today. I'm always excited, though. I love breaking down the market activity with the crew.
Yeah, it's definitely a lot of fun going through it with the team each and every day. And obviously bringing the coaches in here at Tackle Trading, getting their thoughts as well is great. And Frank, we love Fridays because, we get to focus on technicals, focus on the wrap of the week, and also we get your charts. How you doing, sir? And how you seeing these markets today?
Hey, doing well. As always, like Matty said, always my pleasure. Always fun to come hang out, talk charts and trading with you guys and the crew. First game of the football season last night. Great game. I think all enjoyed it, unless you were a Cowboy fan.
But you might not like the end for sure if you're a Cowboy fan.
Even a Cowboy fan might be looking. That offense is that good.
Yeah, they're probably not.
I think they're probably. You lost to Tampa Bay at Tampa Bay. Great game. Though. I mean, I was very impressed with both sides of that battle last night. Thought it was a great game.
Yeah, it was exciting. Yeah. Can only hope my Bronco game is equally as exciting.
It was a great kickoff for the NFL season, no doubt about it. If I'm a Cowboy fan, I might be complaining about that no pass interference call at the end of the game, but who knows? I know a few Cowboy fans. They usually do that kind of stuff, throwing a little grenade out there. But yes, you are excited.
That wasn't exactly New Orleans in the playoffs. That was a little bang bang, but no, I get it.
You know how fans are. You know how fans are. Fun game though. Definitely looking forward to Sunday. But before Sunday, we got our little rivalry here on Saturday. We talked about yesterday. But no more football now. Let's get right into markets. Matty, we got a lot. We got to digest, talk about. Yeah. Apple was in the news today. Had a couple of earnings reports. But really, technically, is where I want to start here, Matt. We are fading down here on the S&P. It's been a week of fading. Quite frankly, a little doji drift type of situation, intraday chart just in a downtrend. What's your read on the markets?
Yeah, it is. It's been an interesting fade. And, over the course of the first few days of this week, you just saw the market just methodically drift downward. But over the course of the last couple of days, you've had some random volatility here as the market on the overnight tried to fight back up, got beat back down on the cash open. You see the battle at 44.70 happening right before our very eyes here. So, yeah, I do certainly agree that the market on the daily chart does look like it's just a little bit of fade, a little bit of fade, a little bit of fade, coming into a little bit of support right there on the 20-day moving average. We typically like that as traders. You're kind of in the bull zone there. Yeah, let me get a little bit of a line here, draw you the old pivot point from a resistance level. That's right where the market is there as well. So you are in a buyer's zone. And so that doesn't surprise me that when you come down to the intraday perspective, you see a little bit of more volatility as you start getting into this zone of support. But it's not exactly a textbook bullish retracement where you're looking to push your chips to the middle of the table. A lot of mixed data right now in the marketplace, and the random volatility can work both sides of the aisle there. It can spike to the downside as quickly, if not quicker, than the upside. So you're looking at a test of support, but we have not passed that test yet.
And a lot of the story actually is happening at the sector level, like you're talking about mixed data. There's many, many different sectors that are actually coming down further than an uptrend towards the moving averages. They're coming down more into consolidation or neutrality. I'm going to look at the sectors here in just a few minutes. But Frank, what about you first here? Technically, what are you seeing on the S&P 500?
Yeah, I mean, I'm of the school of thought that we're looking to buy the dip, but we don't really have enough information to say that that's Monday morning right now. I think I think we should probably expect that there could be a little bit more pulling back. Now, listen, buying the dip has been working for a long time, right? And so I'll kind of stick with it. But I found myself wondering, earlier today as I was scanning and not finding as many charts that, I thought, ooh, that looks great. Ooh, that looks great. Is this kind of the September ho hum. So before we get into the fourth quarter, which is historically a good quarter, right? If you're a
Yeah.
pool, that's where the fun times historically have. And I'm just kind of wondering if maybe we're here 2 weeks from now, we've seen some back and forth, but now we're just kind of gearing up into it. But as I look at it, I still think we're looking to buy the dip. When you look at the intraday and you look at the momentum, I don't really see any, to me at least, anything that's really signaling, broadly speaking, it's time to feel like if I don't buy right now, I'm missing out on this buy the dip opportunity. So I will be looking, but I would expect we have a little more downward move before we get where I would like to go, or at the very least, I need to get a little bit of upward movement to give me some confirmation. So as I'm looking at this, still like it, but I do think we need a little bit of time.
Yeah, and I want to talk about that just very briefly because I do think you're in a zone right now of support that is very interesting from a dip mechanic perspective. Like I said, in general, we like 20-day moving average bounces, but for this marketplace, dips are around the 50-day moving average. It's a fairly quick journey down there. This one's a little bit more of a methodical drift in that.
Yep.
So you're in one of those situations right here where you're saying to the market, listen, I don't want to participate, and I'm talking broadly speaking, because there's always trades out there in the market.
Right.
Right now, there's trades in the market, both from a bullish and a bearish side. I'm actually seeing a little bit more bearish potential triggers out there right now. But just broadly speaking in the marketplace, let's say I don't want to participate in that doji fest. Like that's not interesting to me. That's a net neutrality, right? But if you see a little bit more, say 2 or 3 more candles back down to the 50, and we reset that very powerful technical formation we've seen throughout the and it just played out last time when we were sitting here analyzing this dip. I remember analyzing that hammer on this day in the halftime report, saying this is very similar to this. It's that buy the dip. That's that technical pattern. So the 20-day moving average, to me, you see a test here, for example. That's not a dip. That led to a breakout. And so a lot of these 20-day moving average bounces, same thing right here. That's not a dip, led to a breakout, fake out, retracement. And so I'm not that interested in participating in the doji fest at the 20-day moving average, but kind of like you said, you get a little bit more methodical drift down into that 50-day moving average. I can certainly see, and you're not that far away from that. I mean, you're talking about the 20-day moving average currently at, what is it, somewhere around the 44.85 level. The 50-day moving average is 44.20. The low of today is 44.68. So you're just a stone throw from that occurring. I mean, we're talking 1 to 2 days. So I definitely could see that, and I would be interested in that type of technical formation coming down into the 50. But if you look at this from an intraday perspective, saying, okay, maybe we could find some support here, you don't really have any technical triggers here. You're kind of in an overextended no man zone down here around the 44.70 level. You violated some intraday support level. Obviously, you can expect a little bit of an overextended intraday bounce coming back into some resistance levels. But even if that occurs, you're still stuck within the ranges of the last 2 days, and you really don't have a good technical edge where you could say, let me see something really good. But if you start to stabilize underneath 4,500, break back up above 4,500, and ultimately reclaim that 45.10 mark, I think you're talking about a little bit of a different story there. And so, yeah, I do think the market's in one of these weird moments on a Friday where we're going into a weekend where it's kind of in a no man's land type area, and it needs to see some degree of movement one way or the other before you really can get a little bit more confidence in the directional aspect of the market.
Yeah, absolutely. It's rare that on a Friday I'm hoping for an inside candle on Monday, right?
Yeah, true.
But that's
True.
just one inside candle on Monday could really change the analysis for me. But right now, I think you nail it.
Yeah.
Very good. What are you guys seeing on the other indexes? Obviously, the S&P is in this drift mode, but I'm seeing a different read on the Dow, obviously. But what are you seeing on the other
yeah, let's take a look at the NASDAQ very quickly. A week of absolutely nothingness in the NASDAQ this week so far. A bunch of very, small range candles, very low volatility. 2 days ago, you finally kissed off the 9 EMA. You've been battling that 9 EMA over the course of the last 2 days, but you have not seen that ultimate breakout yet in the NASDAQ. And again, the longer something consolidates, the more hesitation I get a little bit. This is in the zone where you're looking at a breakout, but man, another week of this, I'd downgrade the NASDAQ, quite frankly. But as of right now, I'm still looking at that breakout.
What about you, Frankie?
Yeah, and I would agree with Matt. Because if we fast forward a week and we're still really in this tight sideways range, it would still be a breakout. But now we're starting to see below the 9 EMA, we're starting to fall below intraday moving averages and things like that. So it would be nice if it wants to break to do it next week. I think right now I still think that's the most likely outcome.
I do too.
Personally. But if we do kind of give up this little floor, there could be room for a little more of a pullback in that area. So I do think we want to kind of watch this little floor that's developed over the last week and a half or so. If it turns into more of a pullback, that's great, right? Nothing at all wrong with that. But for our breakout, I do think we need to be making up our mind relatively soon, or we're going to kind of reset a little bit.
That is one heck of a box there, Matty, and there is very, very clear support there on the intraday. Yeah.
It's very clear, and even on today's volatility, you take a look at this. Let me remove my box, but I drew this box last week, and it's in the exact same box this week. So I'll just redraw the box. The box started with that pivot, so let's just redraw that box to the top end. Even on the volatility today, literally on the tick. Same type of levels. So you're in the K trade type scenario box, where you could easily see one way or the other. Obviously, we're looking at this as a bullish breakout because the trend is bullish, the pattern is bullish. It finally caught up to the 9 EMA. But again, on a week where you're seeing a little bit of downward drift in the S&P 500, in a week where you will see downgrades of tackle trading in cyclical areas of the market, in defensive areas of the market, the aggressive areas of the market are stabilizing.
Well, and let's flash through the sectors if we can. Obviously, the Dow, I mean, we're talking industrials, financials, those types. And you can look at the indexes.
Very quickly. Very quickly. The Dow, let me remove a lot of this chart because now we're just looking in some degree of neutrality. The Dow is absolutely, we don't rank the Dow, we rank the sectors. But in terms of the Dow, this is just a neutral mess right now. Lacks theme, lacks analysis, a neutral mess. You got double tops, you have double bottoms. A violation sends you down to 3,400, and quite frankly, you're in the zone for that to happen. So it's a little concerning in the Dow right now. I don't have the exact same concern in the S&P right now, and I do not have the same concern in the NASDAQ. In the Russell 2000, you're still fighting that same type of 50-day moving average bounce, trying to establish the higher swing low after you establish the higher swing high. This is a battle. It's an important battle for the Russell 2000. It's not going to be won today.
Yeah, it's not definitely going to be one today. It's kind of an inside little doji, but it is at a battle zone. Frankie, what about you? Any other read on those indexes you want to give? Or I do want to.
I think Matt pretty much sums it up. I do like maybe, let's see a little stabilization, but could be another interesting run towards that resistance level. But I would agree as we're going into the early part of next week. My game plan is look for inside candle on the S&P or a deeper pullback, and look at the growth areas of the market, of which there are some really interesting setups. That's kind of my general early plan next week.
Where a lot of the story is happening here, Matt, is in those sector rankings. I know you went through them thoroughly here this morning, as you always do when you're doing your top-down analysis. What are you seeing in these sectors? Because we're obviously seeing some transition towards neutrality in some of them.
Well, we are seeing a little bit of transition in the sectors, and it's been a fascinating journey analyzing the sectors this year, and especially the last 3 to 4 months. At the first of this year, the market was performing based on this theme where it's cyclical areas, the vaccine distribution, the economy reopening. It was a very easy theme to understand from a market participant perspective. It was a very easy theme to understand with where you wanted to push your money into the market to take advantage of that. But over the course of the last 3 months, I mean, these sectors have been to the point of going back to their theme-based swing trading activity of the pandemic to a certain extent. And me and Mark were talking about this just yesterday evening, and we were talking about how sometimes it feels like it's a rotation from a daily perspective. And broadly speaking, this market just lacks a proper theme to really solidify where this market needs to go. There's a lot of mixed data out there right now, some bullish, some bearish, some completely made up, quite frankly. But it's been a very difficult market to attach yourself to one theme that has really kind of been driving the market. And so when you're looking at the sectors right now, and again, at Tackle Trading, we like to segment the sectors excuse me, into three different categories. We like to look at them from a growth perspective, the aggressive sectors. There are three of them. That is discretionary, technology, and communications. We like to look at the cyclical areas that are very economically sensitive, and those would be finance, industrials. You also have basic materials and energy. And then you have what is your traditional defensive sectors, which are healthcare, consumer staples, utilities, and real estate. And what we're seeing broadly speaking, and let me take a look at the aggressive sectors very quickly. The aggressive sectors have been the highest rated sectors at Tackle Trading over the last 4 to 6 weeks. And when you're looking at technology, they are our highest rated sector at Tackle Trading. And like we were talking about in the NASDAQ, a little bit of a 2-week consolidation at the top end of the channel. I still think you're looking at 160 as a potential breakout candidate. And if we do break out, doesn't look like we're going to achieve that today, the same way we haven't achieved that over the last 2 weeks. But even today, last week today, I'm still looking at that 160 breakout, saying we break out of 160, we should get some good price appreciation in this area of the market. And so last week we were ranked at 10. I think we're going to have an interesting conversation if we still want to have a 10 ranking based on the consolidation, based on the lack of theme in the market right now. But at the end of the day, guess what? We haven't violated yet as of right now. Again, we have a close to navigate here today, but as of right now, we still haven't broken a support level either. And so you're just kind of in that weird situation where the last 2 weeks where you have this consolidation, a lot of news happening, but you have this consolidation where the market really can't find any momentum, but it's still, you see that 160 trigger, and you can absolutely see the market finding some good momentum with a breakout of 160. And so because support is yet to be violated here, resistance still kissing off that 160 level, I think you're looking at a little bit of stabilization from a ranking perspective, but I do look forward to debating that with the coaches. When you're looking at communications here, communications had a real good flag-based pattern over the course of the early week. Later part of the week, just a little bit of fade, very similar to what we're seeing in the other broad markets, a little battle at that support level. Not really a violation of support, just didn't hold the 9. So the momentum side of it does seem to be dissipated a little bit. We're still looking at a rising 20. You're still above the previous pivot level. I do think you have to respect the fact that it fell a little bit at the 9, but it has not broken pattern, has not broken trend yet. And so I do think you're looking at a little bit of a downgrade here in comms. But again, the ranking right now is 15. So check with the newsletter tomorrow when it gets posted. But again, it's in one of those scenarios where the pattern hasn't been broken, the trend hasn't been broken. It's just like, get going, confirm. Come on, give us some confirmation. That's kind of what we're really kind of waiting on comms. But again, from an overall market perspective, I don't think you can complain too much about communications right now. It just hasn't found the legs, but nothing in the market this week really found legs from a sector perspective. When you're taking a look at discretionary, this is the sector we've kind of spotlighted this week at Tackle Trading. We talked about it on Tuesday during sector roundup. We talked about multiple stocks in this sector, Tesla, Amazon, Tractor Supply, really kind of setting up themselves as well. And you're still seeing a little bit of the stabilization argument that was made on Tuesday and Wednesday, still maintaining that type of argument on Amazon. When you look at Tesla, we talked about the recent failure of their breakouts, but the breakout did confirm and then stabilized. And when you're looking at Tesla, you're now fighting against some pretty important resistance zones over here. As you can see, resistance right there at 771, resistance down there at 750. So you got a pocket of resistance right here that you're battling up against. And then when you look at this on an intraday basis, you see a nice continuation trigger above 764. And so you got a light Tesla perhaps this week following a breakout, maintained the price threshold above the breakout. And then the one we were looking at in terms of tractor supply here, TSCO, we talked about that $200 breakout all week long. I hope you guys were as excited about that $200 breakout as we were. Confirmed yesterday, flew today. You got to like that as well. And so when you're looking at the discretionary sector, it has not officially broken out yet. We did see that technically it tried the breakout yesterday, came right back down. It's trying the breakout. It wants it. It wants it. It wants it. We'll see if it can truly get it. But I do think that that Amazon chart needs to show a little bit of bullish momentum. And on a day where blue chips were a little bit down today, Amazon just didn't have the ability to break out going up against that headwind. But keep an eye on this sector. Keep an eye on this sector the same way we were talking about that with Tractor Supply, the same way with Tesla, and the same way with Amazon. Keep an eye on this sector. We're looking at that 185, a close above 185. We're kissing 185 right now. I'm looking at a front-running upgrade here, Frankie, on this sector. Last week, we were looking at the 40 handle last week because of the longer-term neutrality. The 40 handle is typically something we're looking at from a breakout. Haven't technically got it yet, in my opinion. But what about you?
Yeah,
you ready to put this into bull territory?
I'm ready to front run it a little bit. I do like the chart. I like a lot of things in the area, even some of the uglies, like say a GM, is starting to show a little bit of signs of life. So I am willing to front run.
Nice little bottoming pattern.
Yeah, a little bottoming, breaking above
trigger above 50.
Yeah, so I mean, there's a lot of things in this area, right? So I like that we played defense. It makes sense. It's hard to break resistance. We all know that. Everybody knows that. Holds up, fights a good fight on a relatively bland week, right, in the market. So yeah, I think this is the type of scenario where even though we haven't broken out yet, we do a little bit of front running in anticipation of that. Not to say we front run the trades, right? We front run the rankings though, and that's where my head will be.
Yeah, and that's where I'm at too, because I feel like this is trying to break out, and when you're seeing a NASDAQ kind of fade a little bit, and again, not trying to throw cold water on the NASDAQ, we're just kind of waiting on that breakout. When you're looking at the S&P doing its little fade action and the Russell battling a little volatility over the last 2 days, drilling that 50-day moving average, here's discretionary that has been just nobody has been talking about. Literally nobody in the market has been talking about discretionary, but all of a sudden discretionary starting to form up, play a little offense when the market looks like it's playing a little defense this week. I do like that. I do like that on the chart. So that's the aggressive sectors. When you're taking a look at the cyclical areas of the market, energy still kind of, as I started this week's conversation, kind of stuck in the mud here on energy. You're battling now a downward moving 50-day moving average. You're also looking at an increase in short-term support. You also have the 200-day moving average. It's in one of those symmetrical triangle situations. And technically speaking, some traders love these types of patterns, guys. They just absolutely geek out about them. They just love those symmetrical triangle type patterns where you can see some degree of explosion from a technical response. Think about Apple today, right? And I know we'll get into Apple news. I'm not giving the news. I'm just using Apple as an example. Apple is sitting at a support level literally this morning at 8 o'clock my time. It is sitting at support. Okay, you are sitting at support. A very well-known intraday support level right at 154. Okay, right there at 154. News comes out. It's negative. Okay, what happens? Immediately algorithms drive it down, and you see the volatility just completely take any stop loss out, and then it stabilizes. That's what these technical patterns can do when key information comes to the market. And so when you're looking, and again, just using Apple as an example, we'll talk about the news here in a second, but when you're looking at the energy sector from a sector perspective, you see a lot of pressure on that resistance channel coming down. Simultaneously, you see a pressure being applied on a support increasing. The question is, which one of these are going to win? And so sometimes, not all the time, but sometimes you will see an explosive response outside of the triangle one way or the other. And because you're so tight against the triangle, that explosion could drive the market all the way down to 45 in a very quick journey down, or the same thing can happen to the top side. And so I'm not the biggest fan of symmetrical triangles, but they can be a little bit more explosive than, say, a standard high base or a continuation pattern, or or other types of technical patterns out there. And so energy is in one of those combustible patterns that really can create some volatility. And so I'm a little bit concerned about that, to be perfectly honest. I do think we could debate downgrades here and downgrades. I don't think you can debate an upgrade. Like, that's just out of the cards 100%.
No, even if you break out of the triangle, you smack right into
The
resistance.
50.
There's no
I mean,
room to navigate, right?
Yeah.
So, and if it's that strong, we've got a ton of momentum. We'll play energy that way, right?
Yeah.
That's the way it goes.
So it's in one of those, and so I do think you're staring at a downgrade in energy, quite frankly, given the fact that even if you break out, and this is the concern, you give the pattern 50-50 probability on one way or the other. Truly, that's what it is. Symmetrical triangles. I don't care what anybody says. Give it 50-50. You give it 50-50. The problem is, if the 50-50 plays out to the downside, you get smacked in the face down to 45. And the problem to the top side is, if you break out, you're staring at a downward moving 50-day moving average and a rock solid horizontal 50 handle as well. I just feel that's a very difficult scenario for the bulls to win out in. I do think you're looking at a downgrade here in energy. Energy's cousin from a second mother is basic materials. And when we're looking at basic materials, you're probably going to see a little bit of stabilization, maybe a downgrade, given the fact that we did violate the 20-day moving average in the cup and handle. Even though I still feel the cup and handle is in technical formation, the most likely scenario is some degree of consolidation here with the violation this week of the 20-day moving average. Let me highlight that right here. I do think you have to consider a downgrade in that sector, and maybe take a week off in that sector a little bit, as we're still navigating a little bit of the top of the market with specialty chemicals and the bottom of the market with those miners out there. When you're looking at the other two sectors very quickly, you have industrial. Industrials, very similar to the Dow Jones. You're probably going to see a downgrade here in industrials. You violated all your moving averages. You double top, did confirm. This thing is now just officially stuck in mud. It is just stuck in mud. It is not going anywhere. You got solid support at 100. You got solid resistance at 106. You're currently at 103. Guess the ranking I put. Guess the ranking.
Is it a 50?
It's a 50.
All right.
It is a 50. But that's also would represent a 15-point downgrade. So I doubt it's going to get there, but that's what I did, because again, when you got your range at 100 by 106 and it's been stuck in that range for the better part of 5 months, and you're kissing 103, kind of feels like a 50 to me. But that's you are definitely looking for an industrial downgrade here from tackle. And then when you're looking at the financial sector here, let's not click the order button. When you're looking at the financial sector here, again, trying just to lower that. A little bit of a weird M formation here. I do think you're also looking at a downgrade here in the financial sector. And then last, do these rapid fire style. You're looking at downgrades across the board, in my opinion. Again, these will be official. I give you guys a little bit of an early picture into our rankings here on the Friday halftime report. They are not official. My word is not king, queen, and country. Yeah, vetoes can happen, debate can happen. I have, like, they do their scanning, I do my scanning. I have not completed all of my scanning yet. That certainly plays a role if I see a lot of stocks in finance doing certain technical patterns. So again, these are just kind of my thoughts as I lay them out publicly for everybody, and we'll see if the coaches actually listen to the halftime report in the meeting later today. But when you're looking at finance, I do think you're staring at a downgrade here in finance as well. You did violate a higher pivot type analysis. Had an opportunity last week. It kind of cleaned on to that opportunity as we were kissing off that 38 handle early this week. Violated that on Tuesday. Now you're looking at a little bit of a more prolonged consolidation channel, in my opinion. Look for a downgrade. Look for a downgrade there. But we already talked about that, so let's take a quick look at utilities. Utilities, you tell me. I don't know. You tell me
Yeah.
the volatility that's happening in utilities the last week.
It's
This
listen,
looks like an underbelly stock that nobody's heard about.
It's
It-
particularly for weird candles, knowing its utilities.
yeah, knowing its utilities,
Okay.
really, yeah, it's
Explain this. Nothing,
That's fine. That's utilities.
nothing. Oh, let's pop, let's drop, let's pop, let's drop. It's like a TikTok thing. And like, what's going on here?
Yeah.
yeah. I think you want to reclaim 70 before you have
Oh man.
too strong of opinion. I think this is the type of chart that immediately goes into throw it in the breakout bin.
Mhm.
I'm going to leave it alone, maybe manage things, that I might have. Granted, it's utilities, so for better or worse, it's not an area
Well,
I play a lot in.
officially, I hate the volatility in the utility sector. I think this is absolute garbage right now. This is a complete
Matt hates,
stay away
he
from
absolutely
me.
hates when utilities don't behave
I
like utilities.
hate
It is
it
one of his
so
pet peeves.
much. I hate it so much. Yeah, so I'm upgrading utility. What are we talking? No, I can't. No, I'm looking at a downgrade here in utilities. Volatility shifts at the top of the chart for utilities is a telltale sign for me. I don't like it. I think it leads to a little bit of price depreciation here. But again, if you're looking to add, Frank is absolutely correct here. And the level is easy. The level is
Yeah,
easy.
it's an easy one.
Look at this. Boom, boom, stuck. No, we're not even going to try 2 days this time. 1 day. We're going to try 1 day. We're just going to act like the most aggressive tech stock in the history of mankind. Nope, couldn't break 70. The handle's easy. If you're adding above 70. And then the last two, we're going to take a quick peek at. Quick peek is consumer staples. Little bit of an M formation. That's a stay away from me until we navigate the formation. And then XLV healthcare. Healthcare, one of the highest rated sectors that tackle trading. Nope. It's been getting downgrades, guys, and it's been getting downgrades before this. We downgraded here, we downgraded in this, and now we're looking to downgrade again. It does look like healthcare is out of favor yet again. This is now the third week in a row where healthcare has been falling a little bit of out of favor. I think it continues. And so you're looking at, so broadly speaking, you're looking at a little bit of maintenance in the growth areas of the market, but you are looking at downgrades across the board in cyclicals as well as in defensive, in my opinion.
Frankie, anything you want to add?
I'll fight for a maintenance on staples. I agree on utilities. I agree on healthcare. I mean, healthcare plans are just taken on the chin right now.
Mm-hmm.
So I mean, the chart of XLV, does it tells us enough. But when you realize how bad those healthcare plans are getting hit, at least right now, it's an easy downgrade for me. In staples, while on one hand I could see how it does turn into that M pattern, I could just as easily see a scenario where 1 or 2 upward days next week turns it into a little bit of a cup and handle breakout scenario.
True.
I don't think it's an upgradable space, personally, but I also don't feel like it's a downgradable space just yet either.
And that's why I love the conversation, because I haven't done my scanning in consumer staples, and before I solidify my opinion, because my opinion a lot is based on the technical price response in the sector itself. But so I haven't done the actual scanning in the stocks within the sectors yet. I'm going to do that immediately following the halftime report. But when you take a look at Kroger here, positive earnings beat, gets absolutely blasted. I don't know, that just, and that's the only thing I had on my mind going into analyzing the sectors, because I did my earnings report before the
Mhm.
sectors. And so as I was going into the sectors, I'm looking at staples, I'm thinking about companies like Kroger. And I'll just give you the raw numbers, guys. I was going to do it in earnings roundup, might as well do it right now. I only got two to talk about anyways. Kroger comes out 80 cents versus 63 cents. Revenue comes in at 31.7 versus 30.6. Guidance was increased 10%. You're talking about beat and increase in guidance, and Kroger gets demolished.
Yeah.
Like, this looks like a pre-planned sell from institutions, in my opinion,
Yeah.
based on an amazing quarter that Kroger had. That gives me a little bit of concern from a sector perspective.
And I went through a bunch of different data on Kroger trying to figure out exactly what was going on, because it's always causal relationships, right? When you see a price
Yeah.
response and you see the raw numbers, you're like, okay, why is it actually moving? Wasn't the conference call. It was a little bit of downward guidance, but actually wasn't that bad. I think it was probably
But the downward
pre-planned.
guidance was only on some aspect of one thing. I mean, guidance itself was increased for 10% across the board for all of 2022.
Long and short of it, every bit of thing I went through, there was nothing that explained a 7% move in a food company that's still beating EPS and revenue, but it did happen. So probably just a price response based on somebody wanting to unload and take a little bit of profit on.
Yeah. So, but my point was, that was in my mind when right before I was analyzing the sector. I haven't analyzed all the components in the sector, and Frank is absolutely correct when I'm arguing for a downgrade based on the double top. Well, technically, if you form a higher low right here from that support level, that is a cup and handle continuation. And so and that's why I love the debate. That's why I love the conversation. And that's why I love the scatter report meeting, is because you guys get a lot of me in the halftime report, but a lot of me comes from a lot of them. So I'm the mouthpiece for it to a certain extent.
And this one might be the harder discussion. I think a lot of the other areas, though, are looking at slight downgrades as we've moved into neutrality on a lot of them, Frank. So we are going to see some downgrades. So we are going to see
I do
some
believe we're seeing some downgrades. Yeah, I do think we're going to see. I don't know that we'll see any upgrades. I don't think I will be arguing for any upgrade other than the discretionary, front run the breakout. And there's no guarantee that I win that fight.
We will see.
You're winning that fight.
I think you will, as a matter of fact, because I'm on your side
as
well. So we got three people here. All right, let's move on. Let's do a quick flash through the commodity market. Then a couple of stocks. I know you had one other company you want to highlight in earnings.
Yeah,
we got to get to Apple as well.
Well, let me just give that news very quickly.
Sure.
Okay. So the other earnings report I had was a firm. And let me get their raw numbers out here. I wasn't planning on doing this very quickly. Okay. A firm firing off. This was an interesting one for me. They came in at a negative 48 cents. Expectation was negative 27 cents. Revenue actually came in pretty decent at 261 versus 220. So mixed on EPS versus revenue. Guidance came in slightly increased. I don't know what they said, but this is firing off, and that is fascinating to me. Technically here, Frankie, you got to read here outside to just put it on the radar?
Unless you're going like momentum intraday bar by bar, like hourly bar by bar, I don't know how you trade this outside of just pure momentum. I mean, it is pretty, right? I mean, it is impressive, but
it was a gap and run.
It was a gap and run. Right. I mean, the interesting thing is what we got a little bit about $15 until we get into that old resistance level.
That 145,
so, I mean, there is room that these guys could continue to run. I would have no objection to wanting to buy them. Let me put it like this. I'd want to get in on this action, but I don't think there's any way I could make any sensible risk to reward workout, which is usually the case on these big gap ups. I'm interested. I like the post earnings move. You guys know that. It's just, you got to get good development so you have good stop loss placement. And on a giant bar like this, I mean, do you really want to go intraday?
Frankie, the only thing I see is momentum above 125, stop under 120. You take the $5 risk and you just let it run to 150, or 140, 145. Right?
Yeah. The only other thing I would add is a similar philosophy, just a little bit different, is to run it and trail the stop up below the hourly 9. Using the hourly 9 as your momentum moving average. If these guys want to live above the 9, cool, let's roll with them. If that changes. But I mean, we're starting to there's nothing wrong with doing that in my opinion, but I'm not going to do that.
Yeah, it's there. It's there. What's interesting to me though is you've had a little bit of a gap before the earnings announcement. The retrace got drilled with the earnings announcement. This is a stock that's now up over 100%, literally in less than 3 weeks, guys. The momentum here is fascinating. Not for the faint of heart. The volatility is off the charts. But it's certainly interesting. Certainly interesting. Caught my attention here today. And then last,
quick one on that one. Quick one on that one.
Yeah.
And back on a firm if you can.
Thanks,
This is
quick.
a sentiment darling, real quick. After the deal it struck with Amazon a couple of weeks ago, I'm thinking maybe just institutions are wanting to pile in. Watch this candidate for sure.
And that's where I see them. I do see the momentum trade above 125, stop under 120. But that's not a great trade. Like you're looking at pure momentum on that one. I do agree with you, Tim. I think with after the Amazon and now the positive response to earnings, I think this is something to keep on the radar.
Yeah, I do. Yeah. All right, good.
All right, and then last, just stock in the news because I want to get to Frank's charts. Apple here. Tim, they came out today and the Epic Games. You guys remember the Epic Games lawsuit?
Sure do. We've been tracking this for a while.
Apple lost it, and that's what happened.
Well, they have
I'm sure they'll file some type of relief, but the actual news is the judge did grant an injunction that does not allow Apple to force developers and third parties to use their payment systems and pay 15 to 30%. It does look like Epic Games is coming out on top of that. Now, the judge ruled in for Apple. I remember seeing the headline, Tim. You and I were in the pre-production show, and we're talking shop, talking markets, hanging out, talking fantasy football and everything. And all of a sudden, Apple violates support.
Just
right?
dropped, yeah.
Just absolutely. And Mark says, "Hey, what happened to Apple?" Like, "Oh, judge ruled." Went out and Tim's literally reading like, "Apple wins this, Apple wins that, Apple wins, Apple wins, Apple wins, Apple wins." And I said, Tim. Apple can win 99% of them. There's only one that matters, right? It's like in those court cases, there's a million things they put in the lawsuit, but it's really only over one very important topic, and that is the ability for Epic Games to use their own payment systems within the Apple Store. And so Epic does seem like they're coming out on top there. I am not that concerned. I truly see this as a stop-loss algorithm drive after a negative news event. What's going to be interesting on Apple for me, and I want to get Frank's technical read here, is I'm seeing Apple at 150. This is a major support level for Apple. You see the kiss over here. You see the kiss. Tried to break out, kiss there, finally broke out with some force here, established that higher high. You started seeing that bullish fade, bullish retracement, bull flag starting to develop the 2 days before this news came out today. This just took a quick journey down to support for me. If you missed the breakout and if you drilled that breakout, you're looking at that 150 handle to solidify himself. Is it a buy the dip candidate? Yeah, it is, but I'd like to see that technically solidify itself on the intraday chart. Right now, we're just seeing a little bit of stabilization. Give me a nice little breakout. Give me some more stabilization around 150. I do think Apple needs to be on the spotlight. It's one of those things where I would love to put it on the option report with one of those analyses that says needs a doji.
Needs doji. Yeah.
And it definitely needs one. It's got a lot of good stuff though, right? 150, a big, number, obviously a big breakout point. We know that matters to Apple. Yeah. The 20-day moving average is there.
50's at 147, creeping
the 50's
up.
Not too far. The 200 hourly is in the same general ballpark. So there's a lot of good catalyst stuff there, right? And we've even seen a little bit off of the lows here today, but it really is. It's one of those that if this had just gradually pulled back to 150, we'd be like, oh, that's just a well-behaved Cody special. This is like an unruly Cody special, right? So we are going to need a little bit of development. I do think if we take too much of a trip further, then the analysis will change. I don't feel like I'm going to have to rush off to get this. I think this could easily be one of those where there's a green handle on Monday, and I think I knew I should have bought it, and then a selling on Tuesday and Wednesday, and then an actual entry on Thursday. And if that's not the way it plays out, then fair enough. I'll just
let me throw a question,
yeah,
guys.
Go.
Next week, when they announce their new iPhone at their launch event that they do every September, which they're going to do next week. Do you think anybody's going to be talking about Epic Games?
No, I'm not overly concerned about this personally.
Listen, when the news came out that the South Korean government had basically already made this ruling, this was the shot across the bow. And I literally said that in the halftime report that day. This is known. This has been debated in American politics for 5 years now. We've had Apple, Google, Facebook, all of them on the Hill multiple different times. We know what this is all about, the App Store, and having Google and Apple's ability to be have third parties' ability to sell their material on the App Store. It's been a debate, but after South Korea came out and did what they did a few weeks ago, I kind of felt that gave the go-ahead to the rest of the world to do the exact same thing. This does not surprise me in the slightest. I don't think it's a surprise Apple investors in the slightest as well. And I think Apple itself is going to shake a leg at it and keep on trucking.
I don't think it surprised Apple management. I think they saw this coming as well. They've been trying to make concessions about it and all that kind of stuff. So yeah, I'm with you. It's an interesting technical location, needs a doji, inside candle, something on Monday. We might be looking at something maybe next week, but I wouldn't be, from a longer term perspective,
good for Epic Games as well.
Yeah,
good for Epic Games as well. Everybody else bitches and moans and cries in their spilled milk. Epic Games took on the giant and won. Good for Epic Games.
I agree.
For sure.
I agree. All right, very good. Let's flash.
They're a hero to every developer right now, guys. Like
for sure, there they are.
Oh, dude, seriously, people who develop apps,
they are
David
in the Goliath scenarios. Yes,
they're popping champagne.
Good for Epic Games.
Yeah, I'm happy.
And you know what? Apple will be just fine.
Agree.
Yeah,
agree.
Especially when they sell $120 billion worth of their new iPhone.
That's exactly. I think that's the biggest event next week.
Super cycle. They're going to be all right.
You're going to hear the phrase super cycle a couple of times, I guarantee.
Yeah, they're fine.
Anyway, all right. Let's move through the commodity market just real quick, Matt. I think we can do it rapid fire style. Crude oil still looking the exact same it has now for about 6, 7, 8 bars for me. Looking like a real nice juicy breakout at 70. You guys seeing the same thing? That's what we
said. Rapid fire. I got nothing to add to that.
Good.
Yeah, it's a little more interesting breakout at now than it was a week ago.
Gold.
I will agree with you there, Tim. That's as far as I'll go.
Rapid fire style. Gold is in the box on support, kind of down here. Same analysis I've had.
It's Bitcoin under the box.
Is it now under the box?
The box is 1800 to 1840. It's currently 1792. I might need to redraw the box and get these
I think so, man.
Get these wikis at 70, 75. No, it's net neutrality for me for gold.
Bitcoin trying to fight here at 45K. There's some intraday action that they're going to be pushing on some support at. Break down below this 45K here. I think you're looking at a trip to 40,000 personally, or around the low 40s, somewhere in there.
Quick trip.
What are you guys seeing here in Bitcoin?
Same thing. You're seeing a little bit like we talked about all week. After a violation of out of a breakout like that, you're going to want to see the intraday stabilize. You're going to have support test in that environment. That's what we're going through.
Mm-hmm.
I don't have a big take on Bitcoin's $1,000 movement down in price today. That feels like another hour in another day.
Not at all. Me neither, as a matter of fact. In fact, I think the last 3 days we've been trying to just kind of digest and understand the flash crash from Tuesday. We'll see what happens as they battle that price level going forward.
Frankie, we had our good buddy Jake on the pre-production show here today.
Yeah,
and he just showed up, and he's a crypto guy, right? Big crypto guy. And we're talking about Bitcoin. I'm like, hey Jake, what do you like? Because I'll go to Jake for like random stuff in crypto markets, and Jake's like, oh no, I don't like Bitcoin right now. Kind of liking Hex. I'm like,
he had his favorite.
I'm interested. I'm interested. Just because he's interested, I'm interested.
Sure.
But no, he told me it wasn't the go ahead on Bitcoin yet. So I'm going to trust Jake's not the go ahead yet.
I agree. And then one last one here. I just want to note it. Copper. Copper is not something we bring up every day in the halftime report, but today it is
when it breaks out.
Very, very good. Breaking out of short-term resistance and popping on the same day that Credit Suisse, by the way, downgraded copper and FCX. So it's calling for a copper top. Kind of bad timing there, Credit Suisse.
Bad day on a day when America announces 8.3% annualized PPI report inflation too.
Thank you. There's some interesting things in this chart, man. You gotta like what's going on.
I'm going to tell Credit Suisse. I'm going to tell all those international banks the same thing. Real tough to call top, guys. Real tough to call top.
It is.
Especially on the day when it just broke out. Real tough to call a top there, Credit Suisse.
And on the day PPI report came out and showed 8.3% increase.
How do these
annualized.
bankers get the job? Like,
what are we doing?
What are we doing?
Oh, goodness.
All right, that's all I got here today, guys. Let's do Frank's charts. We cannot make the people wait any longer here. Frankie, what you got dialed up for us today? This is one of our most popular segments. So what chart you want to start with?
It is absolutely one of my favorite times of the week, because I mean, most of the time, on Friday through the week, I'm just hanging out by myself thinking, oh, that looks good, and talking through it in my own head. I'm not the greatest company, so it's nice to have other people around. I got to start with Broadcom. We talked about them last week on the earnings roundup. We talked about that weekly breakout. We are at least arguably knocking on the door of that breakout, depending if you care about a wick from a couple weeks ago. But this is a beauty. Maddie went over their earnings last week. Long consolidation, right? Long consolidation. Semis have been strong. SMH threatening to break out. I mean, you still have tech threatening to break out. I want to be
SMH
involved.
Breaking out.
I want to be involved with that space. And, I've always been a big fan, and, I'm a little bit of a slower swing trader, right? I'm somewhere between a swing trader and a position trader. I don't know what the middle between those are, but I think that's what I am.
You're a methodical swing trader.
Yeah, I'm slow. I don't move super
You're
quick.
a thinking man swing trader.
That's a nice way to put it. That's a nice way to put it. But I mean, how do you not like breaking out of a long-term range? If this was a daily chart, we'd be thinking, oh my goodness, we'd be singing songs. Even better when it's a weekly chart, right?
Yeah,
a lot of upside. I think 550 is a very reasonable target on Broadcom, and quite honestly, I think it can exceed that. But I do think
neutral range is 75 points. I think it can too.
Yeah, so it's an easy beauty of a chart. Even if we don't want to trade this breakout, right? We've got a really nice window. We saw something not too terribly long ago, very similar on Thermo Fisher, right? On TMO, where they broke out of that long range. You can, but you don't have to buy it the day that it happens. We have these big windows, these target zones that we could work after, so we can look for secondary trades or the fourth pullback or the fourth consolidation or whatever it might be. I would definitely keep Broadcom on the watch list, if nothing else.
I got this as a multiple time breakout with confirmation above 500. We've tested above 500. You always got to ask yourself as a swing trader, what do you care about that wick? Because if I care about that wick, it does change the analysis. Me, I don't. We have not had a close above 500 yet. It does look like on a no sell day coming into Friday here at 11 right past midday. It does look like we're a no sell day on the breakout. A close above 500 to me would be a violation of resistance and thus technical confirmation. That sets up for me. Aggressive traders certainly could get in on this $500 breakout. But when you're looking at maybe some additional confirmation, secondary confirmation, it does make some sense perhaps above that 507 level as well. You did get that wick up here early, last week, so that wick kind of established that wiki nonsense. And so 500, you see kind of the channel. You are closing above 500. You got to call that technical confirmation, in my opinion, with a continuation trigger above 507. I love Broadcom on multiple time frames. You look at SMH here. SMH breaking out has not confirmed yet on the break. Not SHM, SMH. SMH, you see the breakout here? Look at those semiconductors. That does look like it might be breaking out here. Broadcom breaking out. Look at old Taiwan Semiconductor finally trying to reclaim some semblance of power here as it now is up against the resistance channel, and you're consolidating against that resistance channel as well. So I definitely like Broadcom here from a directional perspective. I got confirmation above 500 and continuation trigger above 507. In terms of targeting, haven't really done any detailed targeting on it yet, but trust Frank's targeting 100%. 550, 575 makes some sense to me.
Yep, that's where I'm at. 550 by 575, and a good window to work with, right? Even if your numbers aren't
even if you wait till above 510, you're perfectly fine.
Yeah.
There's a lot to like, and if it's not Broadcom, I think they make a compelling technical case, but Taiwan Semiconductor, on Semiconductor,
On
right?
ON.
I mean, there's so
Well,
many
and
nice ones out there.
can I give you a shout out? Is it okay?
Of course,
Is it
I'll always
okay?
accept a shout out.
Frank is doing little mini versions called Tackle Shorts over there on Tackle Trading's Twitter account, and he put out his first tackle short, nice little 2-minute video on ON Semiconductor just yesterday. So if you do follow the Tackle Trading Twitter account, obviously Coach Frank lives over there, posts a lot of charts that he's looking at. Did a video on it yesterday, so definitely check out Tackle Trading's Twitter account. Handles Tackle Trading. Make sure to give it a nice little subscribe. And when you like Frank's stuff over there, you know what he likes. He'll never beg for it. I'll beg for him because I know he loves it so much. He loves likes, retweets, comments. He loves anybody that participates over there, and will always answer questions over there as well. So if you want to get more action on Frank's charts, definitely check out Tackle Trading's Twitter account, because he had ON on before the breakout, and then it broke out.
Yeah, hey, so far so good, right?
Fantastic.
Maybe I should retire while I'm ahead, right?
Well, you're one for one. You're 1 for 1, buddy.
By the way, I just linked
100%.
I linked that first video on ON Semiconductor in the chat. If you're not following Tackle Trading on Twitter, go give Coach Frank a like.
Well, and that is the only place you will find those tackle shorts for Frank's charts is on Twitter. We guys, get excited for tackle shorts. We have more tackle shorts coming down the road as well. We're going to have Jedi options. We're going to have Matt's whiteboard. We got a lot coming down the pike, but we did kick it off this week with Frank's charts, and what a kickoff with ON. Great job, bro.
Kick it off. Appreciate it. Yeah, come join us. It's a fun way to be able to, just another way to interact with the community, right?
Absolutely.
So there's always room for one more of you over at the Tackle Trading Twitter. You can also find me at Frank Martin 23. Between the two, I'm a pretty easy dude to find.
Yeah, absolutely. Any other charts there, Frankie?
Of course, we got to look at least a couple other charts, don't we? I got to look at IRM. This is a REIT. Now they're going ex-dividend, I think, on the 14th.
Yeah.
So like on Tuesday, we had this big breakout of this cup and handle pattern, right? Nice little, very easy to see breakout a couple of weeks ago. Nice drift back into that old resistance level. I don't think we've got the confirmation yet. It would be really nice if it happened Monday, so we could at least, get in before the dividend date, which is payable in October. I want to say, don't quote me on that, but I think that's what I saw. Nothing real crazy here, just a good old-fashioned pullback to the breakout channel. Pretty mellow, pretty slow, right? That's kind of been in line in large part, at least, with the sector as a whole this week. Risk to reward is going to be pretty solid, in my opinion, at least. I can target it to the same way that I would have targeted if I bought the breakout, which would have been, using the cup, right? So going from, around 47 at the high point and around 42 at the low point. So risk to reward shouldn't be a problem on the pullback. Pretty easy trade, in my opinion, with maybe a 50 by 52-ish type of a target. It's kind of where my head would be.
I see it, Frankie. Don't know if I love it, but I definitely see it. And let's look at it very quickly. I got this very consistent here. You got a nice little 4 yield here, 4 yield there as well. So I do got a very consistent technical pattern. Let's start with the zone very quickly. You got to love the zone you're in here. Number one, you see the line I drew. That's multiple different pivot points from the previous resistance levels. You see it kind of kissing into the top end of the zone. The bottom end of that horizontal resistance level is right there at the 20-day moving average. I think this is a pretty textbook bullish retracement, quite frankly. Pay yield, you're probably targeting upwards with the pivot point, probably first target 50, second target 51, 51 and a half. But again, REITs, we're not looking too aggressive here. It just needs a doji, needs a pivot confirmation, really. I definitely see it. The only cold water I'd throw on it is you can see it's a REIT, right? And it can consolidate during the retracement phase for more than just your standard.
For sure.
Okay, right.
Well, that's why I'd like to get in before the dividend. So if we do get into that, at least I've got that going for me, right? Because it's a swing trade, somewhat on a REIT. Hey, hopefully it just takes off, right? It's easy run to 52, but your expectations are it'll be slow.
Well,
Although in all fairness, I've passed on a few good setups on IRM because they were a REIT, and I sure don't feel very
and you
smart
kind of
about.
regret it,
Yeah, I don't feel
right? Yeah,
particularly
you
smart
kind of
about
regret it.
that.
Well, and again, real estate's in an interesting little situation right now. You got a couple things. Number one, you don't love the volatility both up and down here. This is real estate. This is what it needs to do.
Hmm.
This is how tech performs type scenarios. And so you don't love it, but what you do like is you like the zone where this pullback is coming into in the REITs.
Mhm.
You see the old resistance. That's right where the low point was today. And you also like the fact that the REITs have been recovering
Yeah.
off that nasty cash open. You see that nasty cash open here today. That didn't last much more than the cash open, guys. Found support right there at 47, trying to stabilize. So you got to like the zone you're in. You got to like the wick that you're starting to build here. And if you do get a little stabilization above 47 in the actual sector itself,
Mhm.
yeah, that REIT can pivot and do good things.
For sure. Yeah. I mean, my only, our fault with them was they were a REIT, but I think that's a mental, it's
It's
somewhere
for
between
me
their
too.
sense. There's logic to it, but maybe maybe we as traders go a little too far. Well, it's a REIT, right? It can't swing
Mhm.
trade a REIT. Well, sometimes you can,
Oh,
so
hey, listen, sometimes you can swing trade utilities, just not like where they're
sometimes
at
you
right
can.
now.
All right, now,
Just,
Matt, I'm going to make you make a choice here. I'm going to give you two
oh, I like
stocks, very
this.
similar
I like this.
places. We're going to look at Philip Morris and
Oh,
Altria Group. So
you might as well
PM
ask Mark that
and
question.
MO. Is Mark with
Philip
us?
Morris. Technically, I got this as a little bull flat, quick bullish retracement. You got to love the the 20-day moving average bounce. That coupled the 20-day moving average bounce with a little bit of horizontal resistance at 102.5. I got to like that zone. This three candle here. This is a fascinating three candle formation here. This is where you start understanding what creates pivots. You
Mhm.
have what we call the preceding candle, which is the candle that drives the stock down into support. Then you have what is the bounce candle. The bounce candle is the confirmation where you're holding support, and you got to like that level you're at when you're sitting at support and you're looking at that bounce, right? And I haven't talked about Marty the Elephant. I need to do a Marty the Elephant webinar. I got to bring him back a little bit. Marty hit the trap slowed down, and then exploded back up. That confirms. And so this candle would be technical confirmation. That confirms the bullish retracement. It confirms traders to give traders the go ahead to execute their trading plan.
Mhm.
Yeah, nothing to add on that one. So MO, same type of company, but much different chart, right?
Mm-hmm. A very similar company, but you're looking more as a high base scenario where you're upwards to the top end of the channel. You have yet to confirm a breakout here, and you're coupling this breakout here, Frankie, with a little bit of chop over here in April and May of this year. Couldn't fight up against at that time. A breakout here does lead you to kind of reclaim that 52.5 level. So a breakout here, you're probably only targeting the previous level of resistance. Whereas on PM, I'm looking at a targeting here. I would target up here in about the 110 level in terms. So I like the return and I like the probability a little bit more on Philip Morris, but I could see people preferring the high base on Altria. Personally, I like the trend continuation on Philip Morris.
And what about you, Tim? I mean, this is an interesting debate, I think, because if you're interested in one of you're probably not interested in both,
You
right?
should not be
From a
interested in
trading
both.
point of view, you're going to have to pick your poison, and maybe you don't like either,
Yeah.
which is fine.
Yeah.
But where would your head be, Tim?
Yeah, one thing I like about the Altria chart is that you can map out a very, very quick trip to your T1 if you're just looking for like a 2, 3, 4 day swing trade type setup type situation. But I'm actually on Philip Morris's side. I like the trend nature, the character of the trend better. It's just above more moving averages. I like the pivot point relationship. And whether I want to take it as a breakout or on the flag, I could probably start to build that plan around that. I like PM's trend better. So I would choose PM.
Fair enough. Fair enough.
What would you choose?
I think I would go with Altria Group personally, for the reason that Tim said. I think just for me, I wouldn't be expecting a whole lot out of either of them. Right? They're
Yeah.
staple stocks. I would probably like in my head it's like, okay, we break through this top here on MO. We worked back up to those highs at that resistance level at 5250 approximately, and then
Yep.
I just leave and I don't have to think about it anymore. So I think it's the management, not really the pattern or the risk
Yeah.
reward necessarily. I think I just see this one for me and kind of my read of the situation being a little easier. I also like that I kind of have that rising 9 giving me that springboard up perhaps
Yeah, I just drilled
to
it 2
push me
days ago.
through. So, I think it's an interesting conversation technically, because if you take the names, maybe you hate the names, maybe like, Frank, what are you talking about wanting to
Mhm.
swing trade these type of stocks? You're going to be presented with these type of decisions sometimes, right? Where you are picking one versus one versus another. So I think it's always a fun one to have. Now this one's weird, Matt. We'll look at a couple more. This was BJ's wholesale, BJ.
BJ's wholesale, little hammer candle
So yeah.
reclaiming.
So
Oh,
yesterday
tight
I was
against resistance. Okay.
So yeah, yesterday I was looking at them and basically, thinking flag off of the 9. That's where
Yeah.
my head was. Little flag off the 9. I like that shallow retracement type of a pattern. I think it's a great place to be able to get good momentum for cheap risk. Whether I'm right or not, that's what I feel. So, of course, today with the gap down, it kind of throws some cold water on it. And so immediately I'm like,
Nope.
yeah, whatever, who cares, right? It is what it is. But now we fired back with this big hammer. We are going to, barring something real weird, close above that 9 EMA. And as Coach Mark
I
says,
see it, Frankie.
close is a close, right?
The close is a close.
Close is a close. I like this a lot from an entry point of view. I think my hang up on it is the stop was so easy yesterday, right? Getting my stop right below the 9 EMA, that also lined up
I
with
still
intraday
think
support.
I still think the stop is easy. And it's because of one simple thing. This is all market related cash open stuff.
Mhm.
Yep.
The entire wick is. The entire wick is just the cash open got caught up, it recovered. When you're looking at the consistency of this flag here, and let's assume that doesn't exist.
Okay.
So I'm just saying, let's take the nonsense of the cash open out.
Sure.
That's all
Yeah,
I'm
because
saying.
they made it ugly.
And you look at that as the support level, right? The intraday support level here.
That's how my trade would have been built
Intraday
yesterday,
over here.
right?
I think you still trade the plan. I think you discount the cash open here because I do think you're now looking at the intraday confirmation. You have now broken back up above this trend line. You still have your horizontal support level intraday that you could trigger that stop loss under from a flag perspective. Now, if you do take this candle into account, you can't make the trade because I don't think you can make reward to risk ratio work.
I don't think so either.
Right. But I do think if you put a stop loss underneath 57.75, I still think you're applying. I still think you would be accurate in the step system on a flag. Let me put it like that.
Yeah, and that's kind of where my head was, but it was such an easier thing to prep in my head yesterday, right? This was one I was hoping we wouldn't do anything today.
I think you used yesterday's low, and that kind of coincides with 57.75. Put a stop loss.
Tim,
Yeah.
agree with that?
Yeah, I do. And obviously, I mean, I went and looked at discount stores while you guys were talking. Costco's look great, but it's got earnings coming up here. It'd be the only other comparable one in the sector with the trend. It's got a wonderful trend. It's really riding the lightning in it. And when you go to the intraday chart, Matt, that really helped me understand that wick. So I think I can map out a trade too. So yeah, I agree.
So
Yeah.
nice. Well, you've sold me on it, and that was your job. Usually, my job is to sell you.
I sold you.
You were to sell me. I will do one more before we got to get out of here. And this one's it's been impressive, man. And you got to keep it on our watch list. And that's just Allegiant Technologies.
Yes, break above 180 makes a lot of sense. Got good momentum and trend. The 9 EMA is finally caught up to it, following a really good earnings report and then continuation response to it. This looks like a 180 trigger, and you drive this puppy into 200.
Yeah, tighten in on those
You treat the 180 trigger into like this is 90 to 100.
See, and I love
Yeah.
trades like this so much more than even the BJ one. And the BJ one was nice, you know, and I mapped out, we understood the wick and all that kind of stuff. For me personally, the clarity of the trigger up here and the compression of those 5 candles. You guys said this a few weeks ago. I love these segments when you guys are going back and forth, by the way. When you're talking about high bases, you either like it for like a week or like lots longer. And
Yeah.
this is one of those.
There's
it's like
there's a
week.
weird middle ground where I hate it though.
Yep.
There is,
Yep.
yeah, there
That's
is.
you
Yeah.
guys were
I-
talking about that.
yeah.
Yeah.
I know
Yeah.
it when I see it. I couldn't tell you what it is though.
Yeah.
Well,
And this,
because when the high base doesn't work out and it's 3 to 4 weeks into it, all of a sudden you've had violations of support, which means you're in some degree of net neutrality, which means you need to wait for the consolidation to work out. So it actually changes the pattern. But yeah, I get your point.
yeah, it's looking good. I like the trigger up there.
Yeah,
Very
I
cool.
like it too.
So,
Yeah, nice, easy, clean entry stop should be a real easy trade to prep. And what I like about it is they've, you know, relatively speaking, held up real nice in a
Sure.
bit of selling. And you know, when you dig a
Okay.
little deeper into healthcare, you do realize at least some of the selling and some of the weakness is isolated to some degree, at least over in the plans.
Mhm.
Those plants are garbage right now.
Some good candidates on the bull side there, Frankie. Man, that's very good.
I got let's
got a
go.
couple?
3 rapid fire.
I like
Okay.
it.
I got 3 rapid fire. Okay. Now, Frankie, you and Tim, you guys got to pick the one. Is this locked in? It's locked in. Let's play locked
Sure.
in.
Let's play
Okay,
locked
playing
in.
locked in.
Okay, let's play
You know,
locked in.
locked in, Frank.
I got
Yeah.
I got
I
3
just
tech
pick
plays.
the one that I get to play, right?
No. You
don't
pick
say it
the
out loud.
one you think I'm gonna like. The
Oh,
most.
okay.
Yeah.
Oh, I'll
Okay.
definitely win this.
I got 3 stocks, all in technology, all bear candidates.
All right, let's see
Okay.
'em.
Okay. I got so I'm only looking at one.
Okay, one's interesting to you. We're guessing which one it is.
We're gonna.
I may not
we're
win,
gonna-
but I'm
we're
pretty
gonna
sure I won't
start
lose.
with Uber. Okay. Got a nice descending triangle continuation pattern. Now I wouldn't be looking at anything within the chop, but once it violates the chop on a support level, you're looking at a nice journey down to $30 on that weekly chart.
Okay. that's
Now, I'm
interesting.
not looking at under 40 because you do got the chop there right at 38.75. You see the chop, you see the resistance levels over here and here. That coincides with that low price really nicely. And there's nothing, Frankie, until you start getting into the 35 level, which would be target 1. But ultimately, I'm looking more position style and looking down to from an analysis perspective down to 30 would be T2. So that's what I'm looking at on that one. Okay. Second one. Let's go into the solar areas of the world, the NPH, and let's take a look at the daily chart here. Now, nice little M formation, lower level of resistance right here. So you got the M formation,
Now the
fought
inverted
against
cup.
the 200, and then look at the inverted cup.
Gotta
M,
like that. That's ugly.
inverted cup, violation of 160 does make some sense to drive this down into the 150 by 140 level. 150 by 140. So quick little swing trade, T1 150, T2 140. And then the third one, one of my favorite symbols in the game. One of my favorite symbols in the game. They got to get their act together though. Robinhood. Robinhood, kiss, look at that nice little descending resistance channel. Just cannot get above the 9, Frankie. Horizontal at 40. Trigger would be under 40. There's nothing till 33 here. 33, 34.
Nothing till
I'm locked in.
You're locked in, Tim.
I'm locked in. I know.
You're
I
locked
know
in
which
before
one.
I am.
Mhm.
Yeah,
Well,
I don't know the
maybe
math
I know it.
locked in, but I think I'm locked in as well.
Maddie, are you locked in?
Yes.
That did not sound very sincere.
That was spoken. Let me try that again. Yes, I am absolutely locked in. 100%. Let's go.
For me, it's Hood. I think that you're going to choose Hood. I think that the other ones, they're very interesting reversal patterns. Give me the solar stock again. I didn't write the symbol down.
ENPH.
ENPH. One thing that I believe that you love about this is the lower pivot low and lower pivot high that was developing to the
This
cup and handle
resistance
pattern.
level
Yes.
creates an inverted cup and handle.
Of
And I
course,
do love that. Yes.
with a lot of technical triggers in there. There's no question about it. I think you, I
Yes.
mean, you like all three charts, in my opinion.
It paints a longer term story of this is going to get slaughtered under 160. Yes.
Uber's kind of consolidation at the bottom makes me kind of hesitate here. And obviously a break below 40 though, it's going to, or the, whatever the pivot range is, whatever that actual pivot low is, would kind of clear that out. But maybe a little momentum shift is going to make you think about Hood, but it's had negative sentiment lately. They got off the earnings report. I think you're going to choose Hood. Frankie, what do you think?
I think that you're wrong, Tim, and that Matt is going to choose ENPH. There's just too many things lining up. I know Matty loves him a good M. I know Matty loves him a good M and a good cup and handle or reverse cup and handle. Very easy entry, closing below the 200. If support holds, no harm, no foul. He's not there. Risk to reward is going to be good. He's going to have lots of ways to manage the stop loss, whether he wants to be, fairly loose or fairly tight. I'm going to go with end phase.
What'd you pick, Matt?
He's going to say Uber because he hates him.
Tim, you picked too? Oh, first of all, when Tim was looking at Uber, I'm like, Tim, you're missing out on one thing. I hate Uber.
That was my hang up. I know you hate Uber.
I do hate Uber. No, it's honestly very close to me between Hood and ENPH. I love, Frank, you nailed me. Like, I love M formations, but I only love an M formation if you give a reset on the trigger.
Yep.
And it basically just destroys all the buyers' hopes of anything in their life. They've given up. They want to go out and do something else. They want to call trading as a gamble. They want to do something besides accept the responsibility that they shouldn't have bought a double top in the first place. Yes, I do like that. Yes, I like the cup and handle here. And what really kind of firms it up for me on ENPH is the fairly decent horizontal trigger at 160, which coincides slightly south of the 200-day moving average. I like that. When you're looking at Hood, man, I see 140 and I see destruction under 140. But this is a recent IPO that's always in the news that has some of that random upward movements in price on a day where you're just like, that makes zero sense in any world. But I want to short it just because I don't like the CEO right now. So I just kind of want to do it. So there is a little bit of that added emotion. I like the technical trigger under $40 here a lot. So I do like both ENPH, but I will say because of the consistency in the analysis on ENPH, I do like the 160 trigger a little bit more than the recent IPO of Hood. But it's closer. It's close, but I would say ENPH.
Three interesting charts though, and
for sure,
kind of highlights an important fact. There are some bear setups that are developing in the markets as well.
I have not done all my scanning, but I have done my scanning in technology, and this is a sector I like. Right now, I currently have 9 bullish candidates to debate with you folks, and 5 bearish. That's more than recent history is my point. Yes, there's more bear picks.
My buddy Terrence Newsom in the chat's bringing up one bear pick. We'll do one last one here, just see if you guys like it as well. DocuSign. Terrence been around our community a long time. I know he's one of your followers on Twitter as well.
What's up, Terrence?
Terrence, this is an M formation with a violation of support, and the only question you have from a technical response, Terrence, is this pivot point right here. Look at that. That violated the 20. You should have saw some additional pain here, Terrence. What happened? You came into the resistance level. And so I see a quick trigger underneath 280, Terrence, but ultimately I do think you got to navigate 270 to 273 before ultimately you see that journey back down. And so I see that tight trigger. M formation here, buddy. You got to like it. A lot of volatility to the downside. Trying to break intraday right now. You're seeing that occur. Not a lot of momentum underneath that so far. So I see it, Terrence. Just got to concern yourself a little bit with 270 by 273.
Appreciate the quick read for our man out there, Terrence. Always great to see your name in the chat. Guys, I love this. This was a lot of great charts that we looked at. I know that we've got a lot more to go through during our scouting report meeting to help build those watch lists for the team out there for the weekend reports. Let's start moving into the end of our show here on a Friday and the end of our week, actually. Maddie, final thoughts for the team out there.
Oh, final thoughts, as I usually do, guys. Thanks for hanging out with us all through the week here in the halftime report. Really appreciate the community out there. Love you guys. Weekend routines are very simple at tackle trading. Get your job done. Like I always talk about in the halftime report, you got a job to do, right? It's your job to do certain things as a trader. And for us at tackle trading, that starts with the scouting reports on Saturday or Sunday. Making sure to get Gino's thoughts in the newsletter as well, and then come hang out with us on Monday as we break down all of it in the with the futures market open on Sunday and the cash open on Monday on the halftime report. So, tackle trading, have an absolute wonderful weekend. Thanks for hanging out with us throughout the week, and we'll go out there and put some amazing scouting reports together for everybody to use as their little watch list candidates.
Absolutely. And then I'm going to enjoy some football over the weekend as well, Frankie.
For sure.
About
you and me both, my friend.
Frankie, anything for the team?
No, come join us over on Twitter. It's
That's right.
not so bad. I was hesitant at first, but
I need some help. Go ahead, Frankie.
Listen, you talk to Team Tackle, you follow the dodo and see inspirational animal stories, and you follow your favorite football players and wrestlers, and you're good to go. Come join us over on Twitter. It's a great place to be able to interact with the team and just throughout the week, right? A great place to share watch lists. I mean, I've stole trade ideas from folks over there, and I imagine they've stole some from me. So it's just another great way to
let's not say steal, let's say share.
Borrow.
Sure.
No.
Listen, I stole them. They might have borrowed mine. I stole theirs, and I'm not afraid to admit it.
The great thing about the financial markets is we can all take the same
it's okay.
trade.
CNBC steals our analysis all the time.
All the time. That's a good point as well.
It's fine.
All right. Last thing from me here, I dropped the link to the store tab at Tackle Trading. If you are not yet a member of our community, we got 15-day trial to the pro membership over there, 15-day trial to our trading labs over there. Got all kinds of stuff. Come and join us, get all this analysis throughout the weekend and become a part of what we're doing on the back end. Have a wonderful weekend, everybody. We will see you on Monday, same time, same station. Until then,